Good evening, Behrus here, worker with Toronto Real Estate Board. A quick, clear, and relevant. That's how I'll do this time. July surprised us, as everybody knows. August steadied. But the question on many people's lips is this a real recovery in the real estate market or just hesitation dressed up as a momentum? Well, I'm going to break that everything down for you in this video for as much as I can. But in short, sales ticked up. Year over year, August has seen a better sale number than any other August that we've had over the past 2 or 3 years. But the prices kept sliding, and the inventory is at the multi-year high. That combination means the buyers are back, but they have choices. Here are the numbers. Let's see how the numbers will look like in August of 2025. In August, we recorded close to 5,200 transactions. That's modestly higher of a year-over-year basis, meaning that August of last year was a little bit lower than this year. But the average sales prices of this month was slid by 5 and a change percentage. That's close to $1,022,000, and that's a year-over-year basis. Active listings, though, crept up, 27,500. That's a record high that it's in all August month that we have had since 2008. And that's a big factor. Think about it. The translation for commuters and mortgage payers, like me and you, more listings, falling prices. That translates into buyer's leverage, but the market is uneven. For instance, downtown Toronto looks stronger than many suburban pockets. Some price bands, for instance, especially at the entry level, are moving so fast. When we are looking at the numbers, there are areas on the radar this month. For instance, Central Toronto condos, the highest unit turnover on average sale prices of $711,000, showing signs of a stabilization in that sector of the market. It's not all over. Please break it down. Take a look at the stats. Call me. We can sit down and look at these stats. That's to your benefit. In Toronto detached homes, still they are a dollar engine. They are the pioneers of the Toronto GTA stats. Toronto detached traded between 1.5 to 1.12. That's down year over year, but they're still, as I said, they are the engine of the prices of the total GTA. In York region, for instance, the big ticket suburban market of GTA, average prices of detached were close to 1.48, and that is based on the transactions that were surprisingly high and strong. But overall, the quick note for that is that entry level slices are the hottest. Low-rise homes under 600 and condos under 500 are moving the fastest, and that is affordability in action. Now, the hook that changes strategy is inflation and growth. That's Canadian economy. The latest consumer price data, or CPI, which is the most relevant of today's, shows that the inflation is cooling. The CPI is close to 1.9 of a year-over-year basis in August. That gives markets room to expect more rate cuts and more rate reliefs. At the same time, the GDP shows the fragile economy. On a month-to-month basis, it's the July, after the July's a little bit rebound in July, we have seen a contraction in August. But overall, the economy is soft, and the labor market has never been this bad, basically. We have been losing jobs. July saw about 40,000 of job losses, and in August we've seen 65,000, and that is bad in terms of numbers. These numbers amplify the uncertainty that we have as sellers and even buyers. I mean, not every buyer is thinking that, okay, nobody can afford, but I can. The bottom line is that lower inflation plus weak jobs, that again translates into markets that are pricing a greater chance of, let's say, interest rate cut. But that could reignite the demand so fast, or slow hiring could blunt the recovery. I mean, you have to do the trade-off of what I've been telling you for over the past few years. Here is the dramatic bit, but I would put it on every ticket. If Bank of Canada starts cutting rates in a meaningful way, let's say 50 basis point, 75 basis point, over coming month, as some economists expect, we could see a fast wave of buyers return and the prices bounce quicker than most expect. Conversely, if job market losses keep mounting and consumer confidence collapses, buyer will pull back and the window narrows. It's a two-sided sword that we are betting on, and timing matters definitely. Well, buyers, here's my core message. You have leverage. Negotiate conditions, ask for credits, and consider condos under 500 or low rise under 600. If you want velocity and liquidity, look at Central Toronto condos for stabilization and York suburban for choices. Sellers, don't test the market, please. It's a wishful pricing. The price that logically presents, and the houses that are presenting themselves impeccably, they can give you a speed. Overpriced sometimes, but mostly speed. And that kills the, if you're overpricing, that kills a overbidding interest. So it's to your benefit to price it well, price it according to today's market, even in today's day, rather than going back to July and starting quoting July's numbers. For investors, I mean, you have to watch the entry-level brands as if you're a buyer, and convertibility. If by that I mean that if the rates fall, you have to refinance for a cheaper option to get cash. I'll tell you why. But if the job market loses shows more weakness, that could hurt the rental demand in the short run, and that could hurt your bottom line. Track leading indicators on a weekly basis if you're asking me, or if you're an active investor. But let me put everything in a plain English. If you need a home right now, buy smart, not fast. Use inspections, conditions, test and test and test again your finances, the house, everything that you're buying. If you're selling for life reasons, list now, but be realistic on the price. But if you can't wait, you're an investor or you are somebody that is just testing the market, prepare your capital now. Wait for opening in the market. This could be a quick moment that rate comes down and the prices skyrocket. And this could be exactly opposite to that. And the final note, the headlines are, again, tariffs, trade tensions, the periodic job losses. They are making a great copy. The reality is more nuanced, that you're in a buyer's advantage market with pockets of strength. And a rate pivot is a single factor that could change the script so quickly. Keep your plans flexible. As I said, refinance for a cheaper option to have liquidity, to be able to act quick. Use your local data, local real estate agents. Do not trade on emotions for money. If you want a 10-minute tailored briefing on your neighborhood or a quick valuation of what your home could sell for right now, send me a DM or click on the link in the description and I'll cut through the noise, give you my best advice. Numbers matter right now. My name is Behruz, broker with Toronto Real Estate Board. I want to see you on the next video. Please, these videos have hopes in them. Try to watch them over and over and find something that's useful for you. Share them with your friends. I really appreciate that. See you on the next video.